Hello and welcome to the Plain English Finance Podcast, the podcast dedicated to helping you make smart financial decisions. I'm your host, Trey certified financial planner and chartered investment manager. I'm a financial planner with TCU Wealth Management and Aviso Wealth. For more details or to send in your questions, check out the show notes at treybino.ca/podcast. If you want to learn more about me, start with episodes 1 and 2. Let's get into the
22nd?
23rd.
So close.
23rd episode. This episode is on risk management and insurance and kind of talking about what we do. So I have a few things that I wanted to go over, but let's start with the very basics. How do we deal with risk? Tell me about risk. What do we do with it?
What do we do
What's the
specifically?
options?
What are the options? Okay. So I want to say there's a few options. You can either eliminate risk. I forget the word already. Minimize risk. And then something else about risk. But I'm just going to give the example that you gave when you did a workshop. It was of a house. So you can either avoid the risk entirely by saying, I'm never going to live in a
House. You need to give them what was the risk.
a house burning down.
Okay.
Yeah, sorry. Of a house.
Risk of a house.
Risky. You better be careful. Never know what those houses can do.
It depends on where the house is.
I guess so. Anyways, of a house burning down. So you can either never live in a house,
Just avoid the risk entirely.
avoid the risk entirely, which is not, that seems a little crazy, but I guess you could do that. Or you could, or you can decide, I'm not going to light a candle, right by curtains. I'm not going to leave my hair straightener on when we leave the house.
Try to control that risk.
Yep. Yeah. And then lastly, you get fire insurance because just in case it happens, you're protected.
Yeah, so that's called transferring that risk.
Okay.
So transfer it to a third party, and that's really what any type of insurance is your that's what it is. You're transferring the risk of XYZ incident to somebody else.
It's kind of funny when you put it that way. Not my problem.
yeah, exactly. That's exactly what it is there. It comes with a price, but
True, yeah.
you get to give it to somebody else. In fact, originally insurance came about from it was ships sailing and like merchant ships. I can't remember where I learned this, but yeah, it was merchant ships, and they would spread their cargo out even across different owners. They would spread their cargo out because then if some cargo got lost, it wasn't your entire shipment.
Yeah.
And you would just have a little bit of losses versus everything being lost. So imagine 10 ships, 10 different owners, and they put on each ship a tenth of their goods.
Yeah.
It's less risky than putting all of one person's goods onto ship. So you're spreading the cost.
Diversify almost.
Yeah, right. That's insurance. But anyway,
those captains, the
they
crewmates,
weren't really, it was the merchants, right?
The merchants knew what was up.
Yeah. But yes, okay. So that's the lens that when we're looking at different risks that can happen to a family, that is your options. One of the options, which we didn't talk about, is just ignore it. Bad option, always a bad option.
What do you mean?
I just don't think about it. House burns down, just not think about it.
Okay, so that's not avoiding the risk.
No. That's just putting your head in the sand and praying.
Yeah.
That's like not getting house insurance at all, not doing any of the above, and just hoping
nothing happens.
Nothing happens.
And maybe lighting a candle.
Yeah, you're doing nothing different. No, you're not mitigating it at all. Just hoping that your house doesn't burn down.
Right.
Yeah. So that obviously worst case scenario, but we'll talk about the other ones. Okay. Second thing I wanted to ask was what are these big risks that families what could happen?
Death. So spouse dies, both of you die, you have kids,
Hmm.
like
And
everyone's favorite. Sorry.
let's stop with that one.
Hmm.
We'll look at the other ones. What's the actual risk?
What's the actual risk?
Yeah, so is the risk the spouse dying?
No, I guess not. The risk is
What's the
like
risk?
not having their income, not having, like in this specific case, right, for
Talking about
financial planning.
financial, yeah.
Yeah, the risk of not having their income, their like earning ability. You're now one person, like versus a couple, I guess.
Hmm.
And it's like after that, you also have to think about the state you're going to be in. Are you really going to just be like, oh, back to work?
Yeah. So what I just did there, when you're purchasing insurance across the board, you have to understand that you meet insurance meets a need. Don't just make up the need. That's how some type of insurances are sold and missold to the general public. Is because people think that the event is the risk in and of itself.
Mm-hmm.
Uh, there needs to be an actual need there. So, for example, that scenario, do I really need $1 million, $2 million of life insurance if I'm worth $20 million?
Right.
And that's more than enough to cover all of my needs, etc. Well, the answer is no, because the risk of me dying isn't the risk I'm trying to defend against. The risk
Mm-hmm.
is I want my family to be able to, I want my spouse to be able to not work if she doesn't want to, or I want my kids to be able to go to college. Whatever it is, that's the risk, that those things can't happen. So
Mm-hmm.
if you already have more than enough to cover those types of risks,
Mm-hmm.
then
You might not
you
need
might not
life
need
insurance.
that type of insurance, right?
Right.
And that covers all of the different types of risk. So you mentioned premature death, right?
Yeah.
That is an event, um, very common to get insurance to mitigate that type of event. What
Yeah.
else?
Health insurance, like, sorry, like critical illness, disability
So again, let's go
insurance.
back to what's the risk. So start with, you mentioned health insurance.
Yeah.
So start with that one.
Well, I guess I was thinking of like disability and critical illness, but you know how I guess health insurance is more like
We still
the,
get insurance for health, right? Like
yeah,
it's still
like,
part of your group benefit plans for most employees and stuff.
and also like the province, like your health card they run.
Why is that a risk?
What do you mean?
What's the risk? What risk are you trying to mitigate by having health insurance? Even
Um,
for the province, what's the issue that insurance is trying to solve?
that you're too sick to work, like you're too sick to earn money in this case, I would say.
That doesn't really cover the health insurance. Like health insurance, I'm thinking like dental and
Yeah.
like benefits.
I guess it's like more being proactive because then it's like, I don't know, like if you go to the dentist every year and get your teeth cleaned and do all the proactive stuff, you're less like likely to have major dental needs kind of thing. So then like it's probably less expensive to do the maintenance versus like, bigger things. I don't
Yeah,
know.
that could be part of it.
Drug coverage.
Ultimately, though, it's things like that. So, for example, dental's expensive. So the
Yes.
risk is that you need something and you can't really afford it, right? That's the risk of that you're trying to mitigate with dental.
Yeah.
The idea that throughout somebody's lifetime, they're going to pay less into insurance than they're going to get out is insurance companies are not stupid. That's
Hmm.
not when you take the average individual, the insurance company has to make money.
Yeah.
So the certain types of insurance are more important, I would say, than others because the consequences are significantly more important. So, for example, if I had to choose between dental coverage and life insurance, I'm picking I'm picking the one that has the biggest impact to my life.
And you have really nice teeth, right? That's what you're saying. Dental it is, obviously. Just kidding.
So it's okay, so that was the what about disability? What's the risk?
So the risk for disability is, I know this one because there's specific like criteria that you have to choose from with disability insurance. And the risk is if I'm disabled and I can't do my job that I'm in,
Mm-hmm.
that obviously impacts my family and like the income, the household income, right? But if you don't specify that it's like the job you have, then you might like have to go work at Walmart kind of thing. Like they might
So
put,
what you're talking about is
not that there's anything wrong with working at Walmart. I don't want to get in trouble. I'm
who you get in
sorry.
trouble with?
I don't
Okay,
know.
so you're talking about own occupation versus any occupation. So there's types of insurance. So many insurances, especially ones that are provided that you don't buy yourself, provided through like a group plan or something like that. They'll cover you for own occupation for 2 years, and then they'll switch to any occupation. So it's basically saying, okay, if you can't do your job for 2 years, you'll get paid. But if now, after 2 years, your disability, you might not be able to do your job, but you can do a job, well, then we'll stop paying you and we expect you to do
A job.
a job.
It's like it
Right.
doesn't matter if the job is severely like lower paid than the job you were in, right? They don't care about that. It's like, oh well, you can. I don't know. I don't know what a low paying job is. Go work in retail, I guess. I don't know. It's like,
Yeah, whatever it is, right? So
yeah.
imagine a surgeon that was making $1 million a year, um, and then after 2 years they break their hands and can't use their hands anymore, let's say,
Mhm.
and well, you can go be a librarian, right? Like you, whatever you're like, you can go do something else,
Yeah.
but it's not going to be even close to what they were earning before. That's, I personally think that. Anyway, we'll get to that. Okay, so that's disability.
Mhm.
Critical illness. What's the risk?
The risk is you get an illness that's critical, obviously.
Hmm.
um, and it's either like debilitating, chronic, or it's life threatening, terminal, that kind of stuff.
Yeah, so the common ones tend to be cancer, right?
Mhm.
Um, most claims are from cancer. There's the big ones. I can't remember what they are, but the cancer's the biggest
I think
one.
there's heart disease or something like heart
Yeah,
attack.
there's a few.
Yeah.
Um,
Either way,
Big
it's like,
five. And what happens is somebody fighting cancer, you have a lot of expenses around that. Even if you have disability insurance, it's like it might not cover enough. You might be traveling for work, or not for work, for treatment. You might have to go and
yeah, or
stay in another province.
you might
Like,
want to do those, like you might want to opt in for those things, right? It's like
yeah,
if there's like world renowned specialist in the type of cancer you have in India, you might be like, okay, well, I want to go meet
there.
this person. Like,
Yeah.
so then
So
that's going
what's
to
the risk though?
the risk is that A, you can't do those things, I guess. You're limited, or the treatments are too expensive, you can't afford them, or you like again it's your income. You're not going to be working if you get diagnosed with cancer. You're not going like I don't know.
So the risk is that you can't afford to do those things.
Yeah.
That's the risk,
Yeah.
right? Like that there's either, yeah, that it's just, that's the risk. The risk is that you can't afford to do those things.
Hmm.
Again, if you're worth $20 million and the treatments are going to cost $200,000, you can afford to do it. It doesn't matter.
Yeah.
If, however, you do not have the assets, or spending $200,000 on those treatments is going to now mean that you can't retire or you can't live or whatever it is, well, now you can't afford it. That's the risk of you having a critical illness, right?
Right.
What other types of risks could there be? I don't actually expect you to get these ones, but
Oh, I was going to start going into like car insurance. That's probably not. Is that right?
kind of. So one of them is liability.
Oh, yeah,
So
yeah, yeah.
personal and professional liability.
Yep,
So
that
for
makes sense.
example, I have professional liability insurance. I also have other liability insurance, to make sure that if something happens, we are covered,
Yeah.
right? Then long-term care needs is
Mm.
another semi-common one. The cost of that type of coverage is obviously significantly cheaper the younger you are, just like all types of health-related coverages.
Yeah.
Um, but they're the big ones to a family. What, if you get this, I'll be very surprised. What do you think could be some of the big ones for a business, for a corporation?
Um, well, I want to say liability insurance would be one
Yeah,
of our
that's a big one.
corporation.
Yeah.
I want to say like accident accident insurance. Like if I'm just thinking from a business, like if someone's going to sue your
It's
business.
liability.
Okay, so like if someone slips and falls on your, okay, that's all
Liability. Yeah.
liability. Okay, let me just, sorry, I'm a slow thinker, so I'm like, how much time do you
It's
want to
also
give me?
late.
I have pressure. Like if this was just me and you, I'm like, give me a while and I'll think about it. But now I'm like, the clock is ticking. My mind
Yeah,
is
I don't
actually
expect you
blank.
to. I don't expect you to get it. One of the big ones is key person
Yeah,
insurance.
I would never.
I know, that's why I didn't expect you.
Okay.
Do you know what that could be?
Okay, key person is like the person who knows a lot about the business, I'm guessing.
Pretty much. So
It's
let's say
like,
you are running a cybersecurity company and you have a lead engineer, and what happens if they leave,
right.
right? What happens if they're sick? What happens if they die, right? What happens if just for some reason you have to replace that individual? That is a risk to the company.
Hmm.
Why is that a risk?
Oh, sorry. I thought that was rhetorical. I was like waiting for you. The
I
risk
could answer it if you want me to answer it.
the risk is that if something happens to that person, the company can't function without them.
Correct.
They're a keystone
Key person, yeah.
key
So
person.
just like when you're thinking about insurances, exactly what you just did is what I want you and everybody that's listening to do is you need to go one step further to actually identify the risk that
Mm,
you're dealing with, not just like the person leaving is not a risk. If they're a replaceable employee,
yeah.
it's not that much of a risk. In fact, turnover in most companies is a good thing. You want people to be leaving and you want turnover.
Yeah.
So it's not a risk. The risk is that it's an individual that you can't replace very easily, and that
Yeah.
affects your business, right? So that's the risk of that key person. Another one is buy sell agreements. So think of let's say for us, let's say I'm a lawyer and I'm a partner in a firm. I own 50% of the firm. We have a partner. They also own 50% of the firm. You are not a lawyer, right? But me and this other person have built this firm, and then I die. So technically, you now, and all my stuff goes to you. Technically, you are now a 50% owner in this law firm. Do you think that's good for anybody?
I mean,
No. The answer is no. The answer is
I'm
you have no
like,
idea how to
do
run a
I
law
want to
firm.
be a lawyer? I don't
You
know.
have no, you can't be, you're not a lawyer, right? Like
Yeah.
it's like there's a bad situation for everybody involved.
Yeah.
So what a buy sell agreement would do, you would fund that typically through something like life insurance, but you would fund it so that if I die, the company has money to buy out my shares,
Hmm.
right? So then the owner, the 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 other my other partner has
Hmm.
the money now to buy the shares from you.
Yeah.
Means that they're now 100% owner and you have a big wad of cash because they just paid out those shares, right? Buy sell
Right.
agreement.
Right. That makes sense.
Yeah. Yeah, they're the main ones that there's other ones that come into but this is specifically about risk mitigation, so we'll leave off any tax stuff that you'd want to do. Okay, so we talked about premature death, disability, critical illness, and then personal liability. And this comes back to when I say that everything is connected when it comes to retirement plan, like not retirement planning, financial planning, and
Hmm.
why you have to master your cash flow first. We're going to find out why in this one because it's directly proportionate. So let's start with premature death.
Hmm.
How did we figure out how much life insurance we needed? Do you remember?
I know that we like this does link back to cash flow because it's like we know exactly what our expenses are, and I feel like it's not replacing your income necessarily. It's like how would I live without your income, but like how much does it cost for me to live is basically the real question, not like, oh, how much does Trey make? Okay, let's cover that amount necessarily. Like, you can do that. I don't know. Like, I honestly, I have no idea what we did in that, like what the number is. I'm like, I don't know what number we chose, but
So what I wanted to accomplish, so that's where you'd start. So we looked at the risk, right? What's the risk? Well, the risk is that, especially now that we have a Raya and things like that, is that I wanted to make sure that if I'm gone, I don't want you to have to work in order to provide for her, right?
mhm,
So that automatically means I wanted to make sure that we had enough coverage. Not, sorry, let me back up. I wanted to make sure that you was in a position to be able to not work until at least she's, I think we picked 21 years old, and then even beyond that, if you so chose, right?
mhm,
So we say, so then I backed up and said, okay, this is the amount of money that you would need in order to be able to do that. I then take a look and say, okay, how much money do we have, right? And then I say, what's the gap? And that gap is what I funded through life insurance. That's how I determined the amount that I needed through life insurance.
okay, when you say what do we have, do you mean just like our like investments, net
Yeah,
worth kind of thing?
investments are like part of this. I did not cover um, paying off the mortgages and being completely debt free. I don't. I know Gordon Ramsay. It's not Gordon Ramsay, is it? Dave Ramsey.
I realized that's the
keeps saying
second
it.
time. Gordon
Dad
Ramsay might hear
would
this one day.
he wouldn't agree with me, but I am not. I don't. Having debt on appreciating assets isn't the end of the world for me. It just I wanted to make sure that it was manageable. So I
Mhm.
didn't even factor in paying off all of the debt. I wanted to make sure that I that we had covered the cost of us living, you living, if something happens. I wanted to make sure that there was enough there to cover all of the checkpoints that we wanted. And previously we did an episode on the present value calculation and things like that. That's kind of where that comes into place, because basically the calculation I did was I need to cover X amount for this amount of time. What do I need to fund today in order to do that? So the
Mhm.
number that we picked to make sure we covered, that it means that you would have to invest it, right? It means that it will have to grow, it will, et cetera, et cetera. I factored all that in with a reasonable rate of return, and that's how we came back to today's number of this is the amount of coverage that I need on me, and this is the amount of coverage that you need on you, right?
Yeah.
And that's how we did it. We did not just throw a number out there and hope that it was enough. We didn't overfund it, because every dollar that you're putting towards insurance, if it's more than you need, well, that could be going to building a net worth, right? So
Yeah.
it's you don't want to overdo it, but you don't want to underdo it either,
Yeah.
right?
Yeah.
So that's the death side of things. What about disability?
I know like for us, I'm pretty sure you chose the own occupation because it might be, yeah, surely, because you would not want to be like doing something else mostly.
So again, yeah, so insurance outside of, but that means another policy outside of the what you would get from what you would have from work, but correct. And the amount, how do we pick the amount of insurance? Or how did I pick the amount of insurance?
For the
How
disability.
how do you think I picked the amount? I don't think you was actually part of this.
I
Uh,
remember I'm sorry, I hate doing this stuff like the phone call and like they take blood work and all this stuff like for all these insurances. It's just a nightmare. I hate doing it. So yeah, I probably was not invested at all.
no, but how do you think
Um
based on what we just talked about?
yeah, like we would have just you would have calculated how much you earn, how maybe how much you're even projected to earn, I don't know, like later in life and say,
Okay, I'll tell you, it had nothing to do with my earning.
"Oh, so then just like the cost of living again?"
Correct.
Oh,
I don't care about how much I earn. I care about the risk. The
right.
risk is not that I don't have income. The risk is that I can't afford for us to put food on the table, for us to live the lifestyle that we have picked, which means that I got enough insurance to make sure that I could cover our lifestyle if I get sick.
Yeah, that makes sense.
Nothing to do with how much I earn.
Okay. Oh man, I'm learning so much.
And I would recommend, again, everybody does the same thing because it is fit the policy, fit the insurance to the actual need, not just throw out an arbitrary number.
Yeah.
If you think, and this will matter more and more as your income goes up, because getting insurance on $50,000 of income is a very different price tag to getting insurance on $400,000 of income. So $1 million of income, very different levels of cost. You do not need it. You need to buy the amount of insurance that you need. Whatever that is, the goal, you shouldn't just be assigning an arbitrary, okay, well, I'll just do 70% of my income and that's it, 60% of my, like, no.
I feel like
Do the
people might
numbers.
not even do that. They're just like, insurance guy, what should I choose? And they're like, $3 million. They're like, okay, sign me up.
Yeah.
Like,
It's very unfortunate, and that's when they get sold things that isn't required.
yeah.
Okay, critical illness. What do you think we do there?
You probably just put it on me only. I don't know, because I'm always sick.
We actually don't have any.
Oh.
We don't have any critical illness. This is one of those that it's the way that it's structured. It's a lump sum if you get sick. There's actually a relatively high chance of it paying out, but the impact is not high enough for me to assign insurance dollars to it.
Wow.
So if I think of the impact of me getting disabled between now and 65 years old, the impact of that is much bigger. So I'd rather assign those dollars to disability coverage. The impact of me getting cancer now is significantly less. Why do you think it's significantly less?
Because you're a healthy young strapping
the
lad.
impact, not the chance of it happening,
Okay.
the impact
The
of it
impact?
happening. So assuming it happens.
Yeah. Like you have other insurance, I guess.
Yes.
It would just be like more money cap.
If I can't work, I have disability coverage for that.
Yeah.
If I need to spend $200,000 on extra stuff, we have that. So it is not going to change our lives entirely. If the worst case scenario happens and I die from it, I have insurance for that, right? So that the big impactful events are covered.
Right.
The smaller impactful events of needing to travel for extra treatment, for whatever it is, it doesn't have the same impact. So if I'm going to spend dollars in somewhere, we're going to do it in places that it's going to have the big impact.
Yeah, that makes sense. Because I feel like that's kind of just like an extra almost.
For some, it's not, right? For some, it might be a good thing to consider.
Like, what if I mean, some people with, maybe I'm wrong, like cancer, maybe it's not like bad enough that you have to stop working, but wouldn't it be nice to have however much the critical illness payout is?
For sure, right? And that's kind of what I've chosen to give up because it could happen, right? Maybe I'm only off work for a year. Well, disability coverage would be over the course of a year would be less than probably a critical illness insurance payout. Again, for me, it's about the impact of that happening. Yes, if I knew exactly what type of illnesses I was going to get,
of course,
exactly what year I was going to get it, exactly what year I was going to die, I'd have the most coverage for that one event ever seen, right? Because who doesn't want free? But the fact is, we don't know when that stuff is going to happen, and because of that, I plan for the biggest impact events, right? I want to make sure, and this is kind of a theme when I invest, when I'm looking at financial planning in general, I do not want a singular event to be a catastrophe for the family. So therefore, I plan around that accordingly. Okay, long-term care needs. What do you think I did about that?
Probably nothing because
don't do anything.
We're not close to that yet.
And the same principle applies. Yes, it is expensive.
Yeah.
Yes, if it happens, you have a critical illness, right? Like you have Um, Actually, do you want people to know that? I could cut that.
Oh, it doesn't matter.
Okay. So long-term keys, I don't do anything about it. You have MS, so we do know that that is something that will come. Again, we plan for that in other ways. We manage the risk. We don't put the candle
Mm-hmm.
by the curtains, and we ensure that we have assets set aside for that in case, well, not set aside, but have assets in case that type of thing happens and we need help, etc. Right? So we
Yeah.
look after the risk. We don't ignore the risk. I try
But
to get
we're
you
also
to eat less Cheetos and look after
now
yourself more.
that you're gonna have to cut out. Stop throwing me under the bus.
Yeah. Anyway, okay. And then liability. What do I do about that?
That I'm guessing you just figured that out for yourself because I'm like I don't know what I'm liable for right now.
So most people have it as part of their home insurance.
Yeah, like yeah, that makes sense.
So you can get extra that way. I also have a personal policy that covers work and things like that to ensure that yeah we have enough in case something happens, right? So something that you cannot ignore because you never know.
Hmm.
Fortunately, we're not in America though, so
Yeah. Oh, I used to when I worked at Vendasta and I was doing writing, I wrote for a lot of lawyers, and it's those lawyers that have like commercials where they're like, "Did you have a heart transplant with
and it
this
go
mesh?"
wrong.
And then
Yeah,
like,
yeah.
call me or whatever, or like slip and fall insurance, like. So yeah, that's big in the States. I was thinking about that for the liability on the house insurance because yeah, people could technically sue you if something happens on your property,
Absolutely.
but yeah, it's not as I feel like it's not common here. Maybe I'm wrong, but I've never heard of it. And I
Mm,
wrote for a lot of companies in America that were specifically about that. So
yeah, yeah, absolutely. Okay. Um, okay. Any other questions about any of that stuff before I move on a little bit?
nope.
Okay, so big mistakes that people need to ensure don't happen. So first big mistake is head in the sand. So just thinking it won't happen,
Like closing your eyes and
hoping the demons go away.
yeah.
Yeah, exactly. And that's a big one because, and I remember when I was first doing lending. So for anybody that doesn't know, I hated lending.
It's funny though because I just want a quick note that originally when Trey was looking into like getting into finance when we were dating young, you wanted to go into like business lending.
Yeah,
So funny now to think about because yeah, as soon as he started lending, he was like,
hated it.
nope.
No. That was all about the wealth side. But like, yeah, planning, money management side. But anyway, when I hated doing the insurance there because I just thought it was so expensive, right? And they would offer these like disability plans and things to cover like these small payments on these
Cumis,
loans.
right?
Yeah, humans is right.
Cumis.
And I hated it, and I kind of like and I remember my manager at the time, I was very young, and he would tell me you should use it more to kind of not ignore him, but like I just didn't see the value in it until I would still go through it with people, etc. I'd still do my job, but I wasn't very pushy. And I remember this guy came in, and he was a farmer,
Mhm.
and I remember he got a loan for something. I had the conversation with him. He initialed no and all that stuff, um, for no disability coverage, etc. Anyway, he lost his hand in a combine,
Oh my,
and I
that's right.
remember him coming back. Um, Obviously couldn't work, zero coverage, all of these bills and stuff,
Yikes.
mortgage, all of this stuff that he couldn't pay for, and I just like I remember it like it's seared into my mind
Yeah, I
this
was gonna
meeting where
say,
I'm talking to this guy and he's like like it was never going to happen to him. He'd been farming for 30 years ever since he was young. Like it didn't happen, and yet it did. And I just
mhm.
remember that, and that's like it completely changed the way that I look I looked at insurance, and that was a time I didn't know very much. It was just like I'd never seen it happen in such a big way, and it
Mm-hmm.
did. And from that moment on, the conversations changed when I was talking about it, because it was a case of, okay, I need you to really understand the risks involved in this. Yes, it is expensive. What's more expensive is not having any coverage. So as long as the coverage that you do have covers everything that you would want to cover in case of this bad event,
Yeah.
that's one thing. But to not have any coverage, just hope. I'm telling you, if you're going to put money anywhere, if you think things are tight now, really, if you think things are tight now, think how much worse it would be if something like this happens.
And it does.
And it does happen, unfortunately.
That's a
And it's
really,
those, that's why I say focus on the biggest impact events.
yeah.
And disability is one of those that I think is severely under, I think a lot of people are underinsured for, because death, I mean, it sounds really mean, but if I die, you have one less mouth to feed, right? Like your expenses come down to a degree.
I like how you framed it as if you die, but realistically, if you're like, if Cease dies, I have one less mouth to feed.
Yeah. But the loss of income there's a slight offset, you know what I'm trying to say? There's like
Yeah.
a slight offset there.
Yeah.
But if you're disabled and you can't work, you have no income earning ability, your expenses are staying the same. Yet now you
have
have no
all of
income.
this, and like that's so tragic, and like that example specifically, like losing your hand, I feel like it would be so, yeah, I mean any disability obviously would be really hard to deal with, but there's some that would be like, that's a rough one.
Right? And it's just those big things that do happen to people.
Yeah.
You just never, couldn't live with myself knowing that like I could have made a different decision.
Yeah.
Because again, this is from however old you are now until, depending on the type of coverage you get, until you're 65, right?
Yeah.
Like think of all the earning ability. You think that your biggest asset is your house? No, most people's biggest asset is their ability to earn an income.
Mm-hmm.
And if you do not protect that appropriately, I would much rather lose my house in a fire than lose my income for the rest of my life.
Yeah.
Right? Like if you have a house and you're fully paid off and it's worth $400,000 and it's all gone, that's a $400,000 hit. If you earn $40,000 a year, that's 10 years of income, right? If you're 30 years old and between now and 65, you're going to be earning that $40,000 for 35 years, right? That's a lot more than $400,000 of loss.
Yeah.
So it's just that is one of them where I really stress to people, if you're going to put money someplace for insurance, that is one of my big ones. That's almost first on my list until you're in a position where you're pretty much ready to retire.
Mm-hmm.
And again, if you get disabled and you're ready to retire, why do you need disability insurance? The risk of you not having income and that not being able to, you don't have it. You can retire,
Yeah.
So you need to ensure that. That's just a big one. That's one that can really, really, really hurt a family.
Yeah. And like being able to choose, like for that example again, like opting out and choosing to opt out because like what your
good,
insurances
you're covered,
are. Yeah. And I think again, it's like I can relate because I don't like doing it either, everyone. I know it's horrible and boring, but it is important, right? Like you should know what your coverage is. You should know how much you need. You should have all that. Just do it once. Just do it once. It's going to be awful, but just do it.
Well, I mean, you should review it, but yes, if you do it,
you're like, okay, don't listen to this.
Yeah, no, not quite just what, like as your life changes, it's something that you should be reviewing. But guess what? It is really, really easy to review when you know your cash flow numbers.
Yeah.
I'm telling you now, like if you know this is how much I spend. I don't care what you earn. This is how much I spend. I can tell you in 5 minutes the amount of assets you need today in order to make that happen.
Yeah.
So you take what you have, you take away my number, and the difference is how much insurance you need to have, right? Like it's very simple, but it's only that simple if you've mastered your cash flow and know exactly what your lifestyle costs, right?
Mm-hmm.
And it's something that you can revisit if you just choose to increase your lifestyle and you want to make sure that's covered. You can get more if you still have the ability to do so, right? Like
Yeah, because if you're increasing your lifestyle, you might also have a lot higher net worth. And again, it's like, do you actually need the insurance? Like,
absolutely,
so
right?
yeah.
So those type of things is something that people should review. And I would say once every, like when something major changes, obviously, but every 3 to 5 years is probably not a bad thing to do. And if you know your cash flow numbers, then it will take you an hour to do.
Mm-hmm.
Right? Sit down with your planner, take you an hour to do.
Then,
Only if you know your cash flow numbers.
Yeah.
Significantly harder if you don't.
For sure. That's a really good point. Like, knowing those, your like how much you spend was a good way to put it. Because I feel like people are like, oh, I don't want to think about it because they're just spending when they want things, I guess. Like some people.
Which you can do as long as you've allocated an amount to that.
Yes,
right?
exactly.
So it's finding out what works for you, but it needs to work. Anyway, and the other big one that people do is overinsuring minor risks while underinsuring major ones. And this really comes back to when I'm talking about putting too much, like having too much life insurance and not enough disability insurance. Paying extra for increased coverage of your dental plan, so you get your from 70% to 80%, and ignoring disability insurance or life insurance. But there's big risks that in modern society will completely decimate somebody.
Mm-hmm.
Make sure those are covered. Those are the big ones. I don't care if you get a dental bill for $10,000 and like it's really sucky, you didn't have the money, so you had to go get a loan for it. That's a lot less of an impact to your life than losing your income for the rest of your life.
Yeah, for sure.
It's just one of them is catastrophic and the other one is a speed bump. And
do you think people weigh that because of the probability? Like they're not thinking of the, like you said, you were trying to get me to think of the actual risk.
Yeah.
Because it's like, oh, well, that's probably not going to happen, even though it's like they probably haven't looked at the actual numbers of these things happening.
No, but even
like, how many people do you know who've
that
been
actually happens to, right? The thing is, that's also reflected kind of in the price. And you're right that they'll think of, okay, well, if I increase my group benefits, well, I'm definitely going to get dental work done. So that's an automatic $50 savings, $40 savings. It's like, that's how people will think.
Yeah.
Again, insurance companies know this and it's priced accordingly.
Yeah.
So even when I work with people that they send them to somebody and they get the insurance stuff done and it comes back that they're in a high risk category and the disability coverage is expensive, right?
Yep.
There's a reason why the disability insurance is expensive.
Yeah. If you're priced higher, it's because you're more likely to have this. And I was thinking about the types of jobs too. Like if you're working, like we have friends who work in the oil industry. It's like, okay, well, I feel like that would be a higher risk than
depending on the job, right?
Depending on the job for sure, but it's like you'd want to know what your job is and be like, okay, am I like sitting at a desk or am I like working using my body, using my hands, like those things, like
Absolutely. And this is also where like the decision between, like, let's say somebody has the ability to be an employee or work for themselves, or like, and they're trying to decide, this is a factor to consider, is because, for example, group plans that allow you to have disability at a cheaper rate because they're doing it for thousands of employees, maybe it's a lot cheap. A great example is the mines, right? If you go get insurance and you're a miner and you go get insurance outside of the plan specifically for that, it's more expensive. It is going to be more expensive. You're in a high risk job. Yeah. So I always recommend for those people that you take a good look at your what you can get through your employer and compare the prices when you're shopping around, because oftentimes it's cheaper to do that than get it externally. But it's important that you have coverage.
Yeah.
There's a reason it's more expensive. You're working with massive machinery underground, and like it's like I guarantee you all know somebody, if you're in that field, that has been in a really bad accident, or has, fortunately, that's why the company hopefully has coverage.
Yeah.
So if you're a subcontractor starting a small company and you don't, it's a risk. You need to manage that risk, right? And even if you choose, hey, I'm going to take this risk, you should do it eyes wide open, and that should be a conversation that you have with your family, right?
Yeah.
Like it's because it's not just you that you're risking, you're also risking their future and their, like I believe that you have a duty not only to yourself but to your family, so they're involved in that conversation as well, because they are going to be almost more impacted than you would be. But
might be, yeah, for sure. It's kind of funny that it's like a mental thing. Again, like you said, the insurance companies know this, right? If your insurance is more expensive, you're like, I almost don't want to do it because it's going to cost me so much money. But it's like, there's a reason it's priced that way, right? Which
is why it's very important to fit the actual risk, because if there is the actual risk and you get it to that level and you can quantify this is the risk, then you can make that decision.
Yeah.
Right? Is this worth it or not? Because there will be a line where it's a case of, okay, this is just way too expensive. It's not worth it. I don't like the downside of this event happening isn't worth the cost up front to protect myself from that, right? I would just figure out I will do other things to mitigate that cost. That is a very valid conclusion to come to. It's important that you come to that conclusion, though, not just, oh, it's too expensive, don't want anything to do with it. It's like, no, it's expensive for a reason. You need to make sure that you make that decision, right? Because it's a scary one, because it can go wrong so quickly and so powerfully.
Yeah.
But anyway, okay. Any final questions around risk management?
I don't think so. It all makes sense.
Good. So last thing is just to, if you take nothing else from this episode, just remember to fully figure out what the risk is, what the actual risk is, what the impact would be. What's the impact? So I should not the risk. What's the impact of this risk happening, of this thing happening? And then you meet the need with insurance. You don't do it any other way. You need to find out what the impact is. The easiest way to do that, you can do it with financial planning software and things like that relatively easily, but you just got to figure out what the actual impact is and then work backwards from there to figure out what you need.
Yeah,
so
that makes sense.
Anyway, let's leave it there. The next episode is on, oh, you're gonna love this one. It's the start of my corporate series. I'm trying to warm into it. This one is on notional accounts and what they are and how they work. You're gonna love that one. I will try to make it as simple as possible.
You better spice it up somehow.
I will. That's why I left it until now to start with these more dense episodes. Yeah, but let's see if I can make this interesting for you.
Yeah.
Okay, perfect. I will see you guys in the next one.
Bye.
Bye. Thanks for listening to this episode of the Plain English Finance Podcast. Tré Bino, Certified Financial Planner, Chartered Investment Manager, is a financial planner with TC Wealth Management and Aviso Wealth. You should always consult with your financial, legal, and tax advisors before making changes. This podcast is provided as a general source of information and should not be considered personal investment advice or solicitation to buy or sell any securities. The views expressed are those of the individual and are not necessarily those of Aviso Financial Inc. Mutual funds and other securities are offered through Aviso Wealth, a division of Aviso Financial Inc.